In the meantime here, the markets were gyrated by this a little bit. We had a big triple-digit tumble in the Dow yesterday on fears that maybe all of this spending is igniting inflation. It's too early to tell whether that's just driven by these spending initiatives or just a bounce back from a pandemic low that you'd inevitably see higher prices. Be that as it may, even reassurances from the Federal Reserve and Janet Yellen over at Treasury that this is temporary, won't go on forever, did little to ease concerns, at least in Friday trading. For the week, the major average is down after 3 up weeks in a row. Liz Peek with us now, Fox News contributor. We've got Michael Lee Strategies, and Sarah Norman, Democratic strategist, former Kamala Harris campaign advisor. Liz, let me get your, it's hard to say, but Mike, we have the assurances from anyone in power on this that this is temporary, transitory. That's a popular term. I believe the Treasury Secretary Janet Yellen has said 3 or 4 months tops before all of this starts, going the other way. Are you in that camp?
Yeah, Neil, I'm in that camp, and another very important constituent is in that camp, and that's the bond market. So the bond market, it has the difference between short-term and long-term interest rates is what the bond market uses to predict growth plus inflation for the next 7 years. Now, that spread or that difference has declined 20% since the middle of March. So the bond market is saying a lot of this is transitory. And then if you just think about this from a not so fancy pants interest rate spread point of view, and you say, look, it's a lot easier to flip the light switch off for the economy than it is to flip the light switch on. And if you use, as Liz mentioned, Wall Street sell-side analysts, they are the most overly optimistic people in the world, and they have been consistently underestimating the snapback in growth of the economy as we came back. So on March 31st, the expectation for this quarter's earnings was 53%, and right now we're tracking at close to 70% year-over-year growth. So for the analysts to miss it by that much means things are coming back much quicker. And if the most overly optimistic people in the world are underestimating how quick this economy is snapping back, of course, supply chain managers, purchasing managers, people or original equipment manufacturers, right, people that are putting everything together to try to get it on shelves and get their products out there are just not going to be ready for the demand. And so while we have this demand supply imbalance, prices are going to be higher. So I do believe that this is a lot of this inflation we're seeing right now is going to be temporary. And I'd say this $3.9 trillion stimulus, the bond market is also telling us that that's dead on arrival. And that's a pie in the sky.
Well, we'll see about that. But that's a very interesting respect. Sarah, as a Democratic